Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Okay, what's up, people? Hope everyone is doing well. You have me today. As always, guys, if you have any pairs you want me to take a look at, just put it down in the chat and we'll take a look. I'll go through mainly USD, yen pairs, any pairs I'm looking to trade as well. Gold and silver, we'll take a look at them. Of course, we just had some interesting news and momentum has very much picked up on a few different assets, so we'll definitely take a look. But of course, any requests, put it in the chat. And we shall discuss. But we are seeing a lot of strength on the yen pairs. A very strong move up. Yen at the moment is looking pretty weak. This is CAD yen. I've had a quick look at pound yen as well. That one's looking pretty bullish. And it seems to be, if I can spell properly, there we go. It seems to be that the yen is very weak and the yen pairs are just continuing that upwards trajectory. I have been looking at the yen pairs. I think only euro yen looks good in terms of the longs for myself. I like the idea of a long-term pullback on that market because the trend looks quite clear. Pound yen, CAD yen were a little bit corrective. Dollar yen I haven't been a big fan of, but euro yen seems to be absolutely flying. So if there's an opportunity for a larger pullback, I think I will be looking to try and take advantage of that, especially if the next big target is going to be a push to 175, which is where we had that massive sell, I think about this time last year, actually. Massive sell, that could be where price is heading towards. So yen is looking pretty weak. Euro yen's looking pretty strong. Perhaps some pullbacks to test some structure. Definitely something to keep an eye on. And of course, NFP have definitely caused some momentum. In terms of the USD markets, we have seen a bit of reaction as well. USD looks like it's starting to gain a little bit of strength. Euro USD with a strong push down now. Again, everything is still pretty bullish for Euro USD as a whole. I will go through gold, New Zealand dollar, US 30. Of course, just leave requests in the chat. But yeah, Euro USD looking pretty bullish as always, but we have seen a bit of a bearish reaction right now. Is this the start of potentially a retracement or reversal? For the past kind of few days, I haven't really been looking to try and trade the dollar because, yes, we've been falling, but momentum's been slowing down. We've been becoming a little bit slower. You can see how corrective the behavior has been as of late. So I've been looking for potentially a bit of a relief for the dollar, a bit of upside, and NFP could be the catalyst for that. Of course, we have a big candle at the moment, but a lot needs to happen before I really would cement myself as a bull on the dollar. Nice initial reaction, but I do need to see a lot more. If we can get a move that kind of mirrors what we did on the way down, that would make me pretty optimistic. Somewhat of a big V-shaped pattern. There's your first sell, there's your recovery. And then perhaps we could have a bit of a correction from that and then a continuation. And that could be a nice opportunity to go along on the dollar, somewhat of an inverse head and shoulder pattern. So there's your left, there's your head, there's your right shoulder. There's your neckline of the pattern, and that could be the opportunity. I know that looks a little bit messy there, but I'm sure you guys catch my drift. So again, I'm not interested in selling the dollar. I think we've had a lot of movement to the downside. We're looking fairly fatigued. The only way I would be happy to sell the dollar is if momentum really picked up to the downside, which at the moment we're not really seeing signs of that happening. So I think this could be the start of some strength for USD. We'll see if that does continue. And then, of course, looking at euro, that could be giving us some counter trend opportunities to take it back down again. Similar for the DXY, I would like to see euro kind of mirror this move on the way up back down again to show me that, okay, this bullish move is just potentially an anticlimactic move, maybe trapping some buyers towards the end of the trend, and then we could see price flush down. Again, a lot needs to happen before I can start to really talk about shorting the dollar, but we're getting there. If momentum can pick up, I think there's some opportunities there. Pound USD had a strong sell yesterday. Pound's looking very weak. Looks like we're seeing a bit of a continuation of that today, more so because of yen being strong, rather pound than being very, very weak, but we are seeing some downside. Again, a similar situation, very strong push to the upside there for pound consolidation. If we can push down, mirror that move on the way up, I feel like that could give us some nice opportunities for a lower high and a push down, which again would give us, again, some type of head and shoulder pattern here. So it is still hypothetical, the shorts, they're not quite here yet. We could still find support and continue higher, but as a swing trader, I'm always looking for where the potential bigger move could be, and where momentum could lie. In my opinion, we've been bullish for quite a while. We are starting to run out of steam. Yes, everything is still bullish in terms of market structure, but I'm seeing some red flags here, and I'm wondering NFP could be the catalyst for that. We'll take a look at gold, which is having a bit of a move to the downside. I was actually looking to sell gold, but the way I enter my trades, I enter on the 4-hour time frame, so I use 4-hour candlesticks to enter. And the current candle is looking very, very large, so the risk reward is a bit skewed. I'm not really liking the entry either, to be honest. We had a very steep bullish move at the beginning of the week. I was looking to see if I can short around this area here. Basically just looking to continue this bearish structure. Had initially a high over there, low, low, high, lower, low. Again, looking for the next lower high for, again, another push down. The reason why I'm bearish is because we did break structure here, which was the key thing keeping me bullish the past few weeks. We had some lovely bullish structure for gold, which was slowly creeping to the upside, but since last week we invalidated that. Price took out the lows, so I have been looking for a lower high here to form for a push back into support. It looks like that's what could be happening. Of course, a strong DXY would help gold push down, but I'm not liking the entry. To be honest, the candle's a little bit too big. I kind of would have liked price to consolidate a little bit longer, especially after such a strong bullish run. And we are approaching support as well, so I wouldn't be surprised if actually we do have another rally back into resistance, to be honest, for gold, especially on the lower time frames. I would wait for things to settle though, because of course we just had NFP. Things are a little bit chaotic and things are not quite settled. I think if we can see price start to slow down, maybe form some type of channel or some double bottom, that could then present some nice buys off this area. If of course momentum stays strong and we break through, of course, then we probably won't see some buys, but we are coming to support now. It's up to price to kind of slow down, start to reject this area, then present some buys. Then of course there could be some opportunities to go long, and we'll probably find that out over the next few hours. But at the moment the news is still a little bit raw. We're still seeing momentum there. Let's see how we do react at those lows, but nice reaction off the high, strong push down. Now we're coming back into 3,300, a big psychological level. This could be a nice place to buy gold, especially intraday, but the price action will tell us. So definitely keep an eye on that. Silver had a bit of a reaction as well. We were looking very bullish this morning with a very strong candle, and we have pulled back quite a lot of that. I don't think this is anything to be alarmed about too much, because the way I see it, price has printed so many wicks here to the downside. So we have definitely found a lot of support here. Recently we had a strong push higher, breaking through highs here as well. And now we've pulled back into like an area of support, an area of demand, where I could imagine more buyers would step into the market and try and push higher. So just like gold, we've had a sharp push down, leaving a little bit of a wick here. I'll wait for things to settle before looking for any entries. But again, if we can respect this area, this could be a smart place to pick up some longs, again, especially intraday, and we could see a continuation back to highs. I'm still very bullish in silver as a whole. Long term, I'm pretty bullish in gold too. I'm just kind of looking for a bit more of a move down first. But long term, I still think gold and silver likely to continue higher. Silver, I'm looking at 40 as the next big psychological level. That's where I think price could be headed towards. So buys, I think, is still a smart move. I was looking for the retest of this high, but yeah, it doesn't look like we're getting that. Maybe we still do, so I'll keep an eye, but it doesn't look likely. So yeah, silver onwards and upwards. Let's see how price reacts with that level. The news is still a little bit raw. We could still potentially break through, but if we can slow down, maybe continue with the wicks on the lower time frames, could be some nice buys to look to take advantage of. But yeah, in terms of gold, I am still longer term bullish as well. It's just I'm looking for some short term downside, and by short term, it might not necessarily be short term. I'm kind of looking for a push here. That could take a week or two, but again, the bigger picture for gold is very much bullish. We've been trending to the upside for quite a while now, and I'm not seeing any big red flags that would tell me otherwise. So 3150 is still a very, very interesting area to pick up some longs there. So very, very bullish on that. Let me see which pairs you guys have been mentioning. Okay, so we'll take a look at GJ. We'll go through ends the USD as well. But yeah, with pound yen, we've been looking pretty bullish. We had a nice reaction actually in the morning, and looks like NFP has just kind of continued that. But we pull back into a lovely trend line, which has been keeping us bullish for quite a while. We had a test over there, second test, a third test, a fourth test, and looks like we've just seen a fifth one there as well. Price now looks like it's starting to break through some resistance there, and is looking pretty bullish. The way I see it, this uptrend since the low of April, 9th of April, so early April, has just been continuing. And it looks to me that we're probably going to see a push back into resistance here at 199, just shy of 200. So I'm bullish for pound yen, at least till we get to that high. Whether we break through or not, that's a different question. We could very much sell off from there. But at the moment, it looks like the uptrend is still alive and well. Of course, in terms of entries, that's kind of the awkward bit, because you kind of already want to be in the position. Now that price is looking very bullish up there, I'm not so sure about finding entries. In fact, if we can break through this area on the hourly chart, I think some lower time frame pullbacks could look good there, maybe on the 15-30 minute time frame. But the way things are shaping up, it looks like momentum is about to take up the highs, and if they do successfully, I would bet on GJ coming back to highs. So in terms of entries, unless you're in the trade already, it's kind of a situation where you want to drop to the low time frames, wait for some low time frame pullbacks, and that's probably the best bet to really take advantage of this well, because yeah, we've already had a strong reaction. Don't necessarily want to chase the trade at the moment. But if I take a quick look at the yen basket, which just kind of highlights the yen against other major currencies, this is looking pretty bearish at the moment. I still think that yen may have a big swing to the upside back to highs here. I still think longer term that could be the move for the yen. But we can speak later on that, because at the moment things are still bearish. This bearish trend is still alive and well. Looks like we pulled back, left a big wick there a couple days ago, and looks like we could be heading back to this wick low. Dropping to the 4-hour chart, we've broken through these counter trend lines. So yeah, the bears have well and truly kicked in. So in terms of us getting back to the lows here, it looks pretty likely. The 4-hour candle has just closed, 2 p.m. has just gone UK time, and yeah, momentum is very much with the bears. So I would be looking for a push back into the lows. So GJ should continue higher. How's dollar yen looking? I would imagine that's looking pretty bullish as well. Yeah, very strong reaction to the upside. The way I've been looking at dollar yen is just basically as a range, to be honest. Have not been a fan of the price action. We've had these two kind of exaggerated moves here, but they haven't really resulted in much. Big push up, price came straight back down. Likewise with the second move there as well. This has proven to be some healthy support. Price has respected this very well. Yes, we've got a strong bullish candle there, but it's kind of make or break what we do at that level of resistance. If price respects it well, we could come straight back down, and we're back at square one. Even if we break out, we might even form a third lower high like we've been doing. Another breakout, just come right back in. So I'm just not a big fan of price action with dollar yen. You could argue that pretty much all of this is just kind of consolidation, really, and a lot of noise, really. There's a lot of support underneath us, a really big level here at 140. I think if price can come back and retest that, naturally there could be some nice buys off that level. So I think in terms of the more obvious trade, there could be some nice buys there around 140.5, depending how we react, of course. But in terms of the nitty gritty lower time frames there for dollar yen, I'm not a big fan of the price action. And personally, I would stay away until we maybe get some healthy breakouts and we can kind of identify where price is heading next. At the moment, it's almost 50-50, I would say. We'll go through New Zealand dollar. This one, I have been looking for a push down as well. Looks like we're starting to get that. Still quite a corrective move, so it would be nice if momentum could pick up. But I think with USD strength, that could be coming our way pretty soon. But the way I've been looking at New Zealand dollar is kind of like, okay, prices in this ascending channel, we have been respecting the highs pretty well, respecting the lows pretty well. We've been continuous in this channel. Now that price has pushed to the upper end of the channel, naturally I'm expecting price to push back down to the lower end. Very, very simple. If price can respect the high, we would be bearish there looking for shorts. If of course price was to break through that, I would be bullish, or at least not looking to sell. So now that we've had that reaction, again, ideally you want to already be in shorts from up at the high here. Entering shorts now, it just means that you probably won't have the best setup in terms of risk to reward, because ideally you want stops above the high over there. So you might still catch a nice 1 to 1.5, which is not the worst risk to reward in the world, but ideally, if it was something like that, it could be twice the return. But again, the key thing in terms of the bias is respect the high of the channel, looking for a swing back to the lower end. This dotted line here represents the 50 of the channel, the 50% of the range. So this is always a good place to book profits, or maybe try to stop to break even, because sometimes you don't always see the full swing with a range. Sometimes we can get very messy around the halfway and pull back against you. So the 50% is always a nice place to start managing the position. But I would be looking for a push to the lower end of the range. And of course, with USD being strong, that should help us move to the downside. I'm looking at a very similar opportunity on the Aussie dollar as well. This has been heading to the upside in a very, very corrective channel in a similar fashion to New Zealand dollar. Of course, they're very similar pairs, so they do have similar patterns most of the time, but you can see a very ascending market structure. We're not quite at the upper end of the channel. I have been looking for shorts on Aussie dollar, but we're not quite at the high end of the channel just yet. So I've actually been hoping for a little bit more upside before I do find any shorts, but unfortunately haven't seen that happen just yet. And with USD looking strong right now, I do wonder might have missed out on the opportunity here, because of course if USD is going to be strong, then that should take us lower there. Of course, I'll keep a lookout for shorts around 0.66, but that is the plan of action. Very similar trade to New Zealand dollar, which we just discussed. But yeah, like I've been saying for USD, we have been bearish for quite a while. I haven't really been looking to short it because we've been running out of steam, and I think the bigger move is going to be to the upside. Again, I need a lot more evidence than just this bullish candle here. I need price to really push up before I do start taking some longs, primarily on like pound, shorts on like euro and pound. I'm not going to trade the DXY, but for shorts on euro, shorts and pound, I do need to see a lot more momentum. Of course, me being a swing trader, I'm not necessarily looking for the intraday moves. I'm looking for moves that could last maybe a week or two, and things really go my way, maybe even a month, in that kind of sort of time horizon there. So not really interested with shorting the dollar. I know the market has been bearish, but I think the bigger move might be to the upside. Just waiting for evidence that for that to kind of line up. I have had a short position on pound Aussie. I've been holding since last Thursday. Was it Thursday? Yeah, last Thursday. So this is the market I have been more focused on. Seen a nice push. Pound weakness really did help me yesterday. Not quite at my target just yet. I'm looking at a push back down into 2.06. So that's still my expectation for pound Aussie. We're having a bit of a pullback now. We do have this consolidation just above us. So I'm looking to see potentially if we can come back and retest that level and then continue lower. I'm not looking for additional entries. I kind of like I kind of like where I've entered, and I kind of want to keep it like that. I don't want to add any more risk in the middle of this range, because this is the way I kind of look at it. The market has been ranging, and I've simply just looked too short at the high of the range. I mean, there's a bit more to it than that, but that's kind of where I position myself at the high of the range, away from the noise. I'm expecting to see a bigger pullback for pound Aussie. We've just gone and taken out COVID highs not too long ago. I do feel like this trend is running its course as well, so I feel like we could see a lot more downside. I'm just going to see if momentum can continue in my favor. I've been keeping a close eye on Euro Aussie as well for some shorts. That is not quite ready yet. We're still looking fairly corrective, but pound Aussie is a very similar pair to Euro Aussie. And if I kind of have a bearish price in that one, 9 times out of 10, I'll have a bearish price in Euro Aussie. And because pound Aussie's break even, I don't mind having a stab at Euro Aussie shorts as well. I'm looking for a pretty big swing back into these lows, but need to be patient. Okay, let's see some more requests. Okay, I'll take a look at Euro USD. We'll go through NAS 100 as well. I haven't actually taken a look at the indices, but yeah, as I mentioned for Euro, just looking for a lot more downside before I can take some shorts. Somewhat of a head and shoulder pattern is kind of what I'm eyeing up, but we're probably at least a few days away from that actually happening, because I need to see that move first. And again, that could take a few days, then the pullback needs to occur, and that could take a few days of itself. So the shorts for Euro USD are by no means shaped up at all. The market is still very bullish, but that's kind of what I'm looking for personally. If you're looking to buy Euro, I think this is still a nice place for it. You got prior resistance here, brief kind of range over here as well. We did see momentum. I think this is a sensible place for a buy. Let's see how price gets there. Let's see how price reacts, but that looks like a sensible place for a buy in my opinion. But my only worry is how far do we go? I feel like Euro USD has been trending for a while, so losing momentum. There might be a nice buy. We might rip to the highs as well, but I just feel like the bigger move will be in the opposite direction. So that's what I'm getting ready for. But in terms of just trying to find a buy, especially if you're looking for a trade for like a day or two, I feel like this is a smart place for a buy. Of course, we're not quite there yet, so it does depend how we react with that zone. If, of course, we're just seeing strong bearish candles breaking through, then I would stay away. But if we're seeing rejection, wicks, maybe a nice bullish engulfing candle formation, that could definitely be a smart place for a buy, and take a bunch of Euro USD from that regard. In terms of NAS 100, this one is still, as a whole, looking very bullish. We've just gone and taken out the all-time highs. Well, we did that last week, but we have been looking very bullish. Again, there's not a lot to do right now, unless you're kind of dropping down to the lower time frames, taking some buys on an intraday level. If you're looking for a more meaningful pullback, you're going to have to be patient with NAS, but we could always go a little bit higher. That's the thing with indices; they're trending up. They could always see new highs. So you have to be very, very careful with shorts, because it's a very aggressive, very aggressive trade idea if you're trying to look to call tops on indices especially. But at the moment, NAS is still looking very bullish. I feel like if you are looking for an opportunity, the best way to tackle it is intraday buys. As trend continue, as we rip through the highs, this can end up being a smart place for a buy. I like the kind of sell-off, very aggressive push to the upside. This has proven to be very solid support. We might push to new highs, pull back, new higher low, be on our way. That could be something to look at. It does depend on how we push to the upside. If we don't quite see a strong break of the highs here, then I wouldn't look for that retest. But if we do see a strong break of the highs, then yes, I would look for a pullback. But yeah, NAS 100 is still a very bullish market. I can see we're kind of struggling at resistance there a little bit. But again, I wouldn't be looking to short that at all. Still very bullish. We've got a nice candle here ripping to the upside. If we can see a continuation, I think pullbacks make a lot of sense, and just keep finding the buys, keep finding the higher lows until proven otherwise. I think that's the best way to handle it. Same thing with the S&P as well. This one too has just been grinding higher. There's been some lower time frame pullbacks. If I drop to the 15, so a very kind of aggressive pullback over there. Another one, another one, another one. Could probably argue that's a very small one, but you can see the minor kind of miniature pullbacks is the best way to kind of tackle it when we are in these conditions, when price is just kind of grinding higher. Yes, we are going to get that bigger pullback at some stage. The S&P is not going to stay bullish like this forever. You know, we've taken out the all-time high, so we can expect a pullback for the S&P, but you got to be patient. Trying to call the tops on this is just a very, very difficult thing to do, especially consistently. Anyone can get lucky and catch the high, but to do that continuously, yeah, going to be the probability is not in your favor at all. But yeah, indices as a whole, very bullish. I do think we can continue buying. Yes, the bigger pullbacks on the cards. I'm not going to try and predict when that's going to happen. Yeah, it's pretty much anyone's guess, really. Okay, we'll take a look at pound USD. Excuse me. 1.23 on the way up to $2 in the coming years. Yeah, I do think so. I think long-term pound USD, we could see a very big recovery. I've been looking at the monthly time frame. I mean, pound USD, of course, has come from an all-time low very recently. Back when we had that crazy sell-off for pound, we did end up taking out lows here and actually almost hit parity, actually. But we did end up creating new all-time lows for pound USD. So I think naturally this is a bit of a bottom here, and we could see price very much recover quite a lot of that. Personally, I've got targets for push into this support level, which were almost there, to be honest. Roughly this kind of zone here where you can see a lot of support resistance. I kind of mark that as 1.4 as the big psychological level to represent that. That's going to be my target for most of the year, and we're not too far away from that. So I think if you can see a larger pullback there for pound USD, there can be some very nice swing trades and some buys to follow that. But yeah, the market's quite tired, so I'm personally not interested in buying that until I can see a bigger pullback, and hopefully you can look to follow that later on. I think a nice buy would be, certainly for a swing position, would be if we can have that sell-off and then see like a higher low form in respect to that, and that could be a lovely trade to take back up again. But just because we've been looking quite tired, I'm not so keen to keep following that. And I've got some other pairs which I'm focusing on. But yeah, I do agree long term. And of course, if you're looking at 2, which would be all the way up there, yeah, that would take some time. But I mean, last time we bounced from here, we did get to 2. It wouldn't be too crazy to see us do that again. Okay, we'll take a look. I'll take a look at euro pound. Haven't looked at that pair in a while, but pound has been quite weak recently. Euro is slightly strong. That has been a recipe for a pretty big move to the upside here for euro pound. It does look like this bullish structure is just continuing at the low high, just about a higher low, another higher high. Another higher low there again. It looks like price is running back into resistance. Maybe we do start to stall here. Euro pound is quite a choppy pair. I very rarely want to kind of follow trends of euro pound, especially if it's been going on for a while. If you just expand and look at the nature of the market, very choppy, does range quite a lot. So I always want to be a little bit more patient with euro pound, but naturally we are coming into resistance, and this could be a very smart place for a short. So I would keep an eye for some selling opportunities around 0.87. I feel like euro might start to see a bit more weakness soon. We're seeing some signs of rejection initially over here, but I would wait for a deeper test before going short for euro pound. And I would say we're quite stretched as well. But yeah, going forwards, euro pound, I think there could be some downside to keep an eye out for. Not my favorite pair. I don't normally trade euro pound, so it's a pair I keep an eye on, but if there is no kind of quality opportunity, I would very much rather trade another pair compared to euro pound. I'm not sure when my segment is over. I'm not sure if the next person is coming onto the stream. but I'll keep going until... Okay, Mark is ready. Okay, cool. Well, yeah, thanks for having me. Thanks for having me, everyone. I hope you enjoyed the analysis, and I do appreciate spending time with you guys. Thank you for having me, and I'll catch you all in the next one.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, Eightcap. Eightcap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with Eightcap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/eightcap. That's a1trading.com/eightcap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new Eightcap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/eightcap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/eightcap. Now back to the stream.
Hello everyone, welcome to another live stream. Hope everyone is doing well. So how we will do this stream is I'm gonna go through my 6 favorite assets for today, right here on the watch list. Then we're gonna cover chart requests, okay? Actually, let's first do a quick analysis of what's going on in terms of news, in terms of macro, in terms of the main assets. I'm talking about the dollar and I'm talking about the S&P 500. So get your questions ready, get your requests ready, because I have my chat open on the side. So we're gonna go through them. Okay, so first, what is going on with the S&P and the dollar? We need to take a look at the dollar index. On the hourly chart, we actually had quite a big spike to the upside. We had the non-farm payrolls and we had the unemployment rate as well. Both came in better than expected. So the unemployment rate came in much lower than the forecast, lower than the previous number. NFP, non-farm payrolls, came in much higher than the forecast and a little bit higher than the previous number. What does this mean? This is bullish for the dollar, and it should be bullish for the US stock market as well, okay? So bullish for the dollar, bullish for the S&P 500. Why do I have this? Okay, so S&P is going up as well, just a little bit. And what is this? Services PMIs, okay. So S&P is going up just a little bit as well. The overall story for the US dollar is bearish, okay? The overall story is actually bearish, and the US dollar is going lower. It is respecting this trend line. This is the daily chart, okay? Respecting the trend line, crushing lower. It broke some key levels of support right here, continued lower. I'm bearish on the US dollar. Where do I think the US dollar can go? Well, I think this support level, this is kind of the first level. Second would be right here, this level of support. I think we can go lower. I think we can lose 8% more. Could happen. You know, the dollar is currently very weak on the larger scale. The S&P 500, I think those two measurements are the best to give you a reading of what's going on in the markets. Is it risk on or risk off? S&P 500 crushing higher, okay? Just exploding to the upside, very bullish, very positive, respecting the 20 MA, minimal pullbacks. I was looking to get in on the Nasdaq a couple of times, But each time we move, we just don't pull back a lot. There are minimal pullbacks. Okay, so really big moves, really minimal pullbacks, pretty tough for me to get in on buy setups. So unfortunately, I could not have gotten in any buy setups on the Nasdaq. I prefer to look at the Nasdaq, but it is a pretty similar chart. Okay, so S&P 500 very bullish. Now, yes, the dollar caught a little bit of a bid with NFP, but I do think this is short term. Okay, I do think this is short lived. Overall, I do believe we're going to continue going lower. I think there is a bearish case for the dollar and a bullish case for the stock market. The main reason being is rate cuts are coming. Okay, in my opinion, rate cuts are going to arrive. So if I just quickly share my screen, present, share, we're gonna share here, this one. And we're gonna go to the Fed Watch tool, okay? Fed Watch tool. We're gonna see that the probabilities are, by December, 97.4% chance of a rate cut. I know Nick talks about this all the time. I'm gonna pretty much say the same thing. I think rate cuts are coming, at least 2 rate cuts. So that is gonna be great. Let's see if the Edge Finder has updated economic heat map, if the NFP numbers are updated. Okay, not yet. No worries. So let's get back to the charts. If we go to trading view, present, share. So I think rate cuts are coming. Rate cuts are net bearish for the underlying currency, which would be the US dollar, but they are bullish for the stock market, meaning the S&P 500. Okay, so I don't think this positive NFP number, this short-term uptrend on the dollar, will continue. I think this could very easily mean revert. Okay, what does that mean? What is a mean reversion? Let's see it on the 5-minute. Okay, a mean reversion is a move and then a move back to the mean. Okay, so basically there are some traders that went short here, I'm sure of it. They're trying to get the price to go back to where it came from. Okay, because that is the general story, that the rate cuts are coming. Let me just see. Why am I not sharing the screen? Yeah, I can't see the screen. Okay, let me try to fix it quickly. Share. Let's see. Okay, now it's up. Great, cool. Yeah, as I was saying, some traders are probably looking to sell right here. Okay, mean reversion trade. A mean reversion setup is when a move happens, but then you're betting on the price to move back to the mean, back to where it started. And I think that's gonna happen. We already have the big red candle. I think this move, this uptrend is short term and it's gonna revert. Okay, let's see some of the questions. Silver. Can't see the screen. No chart. Okay, you can see it now. Silver. Okay, so I actually have a trade on silver. I see you guys are pretty active with silver. Right here, I am in a buy setup. Currently running around, let me see, 1.1 R. Okay, that's kind of the current state of this trade. If I quickly shared my methodology for getting in the trade, let's do a replay. So at this point, I first looked at the Edge Finder. I was getting some positive fundamental readings. That was the first thing. Second thing was macroeconomics were also kind of bullish for the metals. Okay, at this point we had some We had the Israel versus Iran crisis, which is bullish for risk-off assets. We had some tariff issues, some tariff problems. You have the deadline, the 90-day pause deadline. It's coming up. It's going to be on the 9th of July. Okay, so you're getting some uncertainty in the markets. I think the metals could appreciate. So the fundamentals were right, the macroeconomics were good, and then also the daily chart looked good in my opinion. So for the daily chart, we got a breakout. We got a breakout out of this level, very strong technical breakout, and also overall we are in an uptrend. And another thing, so another confluence, to be honest, the biggest confluence there is, gold already had a massive move to the upside. Okay, gold already had a massive push, massive uptrend right here. Silver, not so much. There was a move up, but it was not as big. If you also look at the gold to silver ratio, USD to XAG USD. Whoop. Yes. So let's do the monthly. We can see that gold has been more valuable than silver in the last period. So this could go back to the mean, could mean revert, and this chart could go much lower where gold and silver is more balanced in terms of the price. So this is another reason why silver could go up while gold stagnates a bit. So silver could be a great catch-up trade. Going back to silver, what I then did is I went to the 1 hour chart and I took a entry. Okay, so this is a liquidity sweep entry right here on the 1 hour chart. Very simple entry, nothing fancy. To be honest, the actual technical entry on the 1 hour chart is the least important part of this trading strategy. Okay, least important part of this trading strategy. So yeah, took this one. It was a liquidity sweep in terms of that there is a range, okay, and above and below the range there are liquidity areas where the price is likely to reject from, and then price did reject from the lower area. I was looking for buy setups, so this was a nice area to get in the trade. And now it's running some percentage. So if you guys, I can see you're very active with silver. If you guys can write down, are you in silver or no? Just write yes if you are, or no if you're not even looking at silver. I'm interested to see how many of you are actually in a trade on silver right now. I think silver is a great opportunity. I think it's an even better opportunity than gold. And I can see Chris Pulver is very interested in silver. Nick is very interested in silver. I think Nick had a trade on silver as well, if I'm not mistaken. Okay, trading silver, hell no. No. Okay. Physical silver, cool. Karen is in silver. Okay, I'm in. Nice. So I think more of you guys prefer gold than silver. I would say look at both. Okay, why not look at both? I mean, gold already had the massive move up. Silver, not yet, not so much. So silver could be a catch-up trade. Giovanni, Marco, do you trade metals on ETFs or CFDs? CFDs, okay. I trade CFDs. I trade on my IC markets. So IC markets, FTMO, Darwin X0, Alpha Capital, 5%ers. And it's all through CFDs. ETFs, I only use ETFs to invest. I invest into the S&P 500, okay? S&P 500 ETF. I also have some crypto on the side as an investment. Okay, so let's see oil. Oil had a massive explosion to the upside, and then it pretty much came back lower with a lot of force. So in my personal opinion, oil is very tricky to trade, very volatile, very erratic movement. And oil is not something I really want to be trading, or if I'm going to trade it, I'm going to trade it with very low risk. I don't want to risk much on a position of oil, because look how quickly this massive movement happened. Geopolitics play a huge part in oil. So we had a huge explosion, 20%, and then you had a huge drop, let's say from the peak to the trough, of around minus 17.5%. So super fast. If you can trade this, then great. I personally don't want to be a part of oil. Maybe not right now. Maybe a bit later at a different price. IC Markets Global is the best. Yeah, IC Markets is great. I don't have anything bad to say about IC Markets. Looking for Euro Dollar and GU buys. Okay. Let me show you one more trade I have running. NJ, New Zealand Yen. This one is running from 22nd of May. I'm trailing the position. Currently, my stop loss is right here on this swing low. Currently in profit around a 3-to-1 risk to reward. And I'm going to close the whole position if we reach this level right here. What's great about holding buy setups on New Zealand Yen, USD Yen, Euro Yen is you get paid positive swaps, okay? So every single day, as long as you keep holding the trade, you get paid positive swaps as a little bit of an income. So instead of paying swaps, you're actually getting swaps. So if this trade goes on for the next 2 to 3 months, I'll be pretty happy to just hold it. You know, if this happens for the next 2 to 3 months, I'm just going to be in this trade. I'm going to keep collecting the swaps and collecting the income through the swaps. So yeah, that's great. I love the trade. I would like to see a breakout as well. You know, if it hits the level, if it goes down, I'll still be in a profit because I have my stop loss in profit right now. Gold. Am I looking for buy setups? Yes, I'm considering buy setups, especially for my prop firm accounts. I also saw you guys want to see the euro dollar. I have it here. Okay, it's one of my 6 favorite instruments for today. So we're gonna cover the euro dollar. I'm looking for buy setups on the euro dollar. Gold. I was looking for a buy setup down here, looking for a retest on the 1-hour chart. That didn't happen. I was then looking for a retest of this level on the 2nd of July. We never hit my level. We broke higher, and now we would have hit the level, but I removed my order. I didn't like the price action. I did not like the price action anymore. Maybe I should have left it in, damn, but that's okay. So on gold, I'll actually consider taking a buy setup on my funded accounts if this happens, okay? If this happens, I'll be pretty happy. A few reasons. I think gold is a nice hedge. Trader Nick also has gold as a hedge in his portfolio. So a nice hedge to a risk on play. Okay, I do have a risk on play on the New Zealand yen. I'm looking for a buy setup on the Nasdaq, looking for one on the DAX. So this would be a nice hedge if there are issues with the tariffs, if there is some sort of a crisis, if Israel and Iran tensions come back. So if there is a problem, gold should go up in value. As far as technical analysis goes, gold looks very bullish, still looks very bullish. It keeps respecting this trend line. Okay, so the trend line keeps getting respected, and that is looking great. So gold, right now, it's around the 20 MA, so it's not overextended. For example, at this point, I would not be looking to buy gold. This is too overextended. Another example right here, a little too overextended. You're buying the straight highs. Here, overextended. You're catching the price. But here, I would say this is pretty good. Okay, I would say this is pretty good. And if you can get in on a nice buy setup, it's a good play. You don't have to risk a lot. You can do maybe 0.25, maybe 0.5% of your portfolio. Up to you how you want to structure your risk management. My plan is to risk around 0.5%. Okay, 0.5% on the gold trade if I get in. Nasdaq right here looking for buy setups. I just cannot seem to catch the price. It has just been exploding up without me. So I was looking for the price to retest this support level. Didn't happen. Then I was looking at this one, didn't happen. Then I was looking at this one, didn't happen. Then I was looking at this one, still looks like it's not gonna happen. But I do have my alert set. I'm definitely not gonna be buying straight on these highs. Okay, I'm not gonna be buying straight on these highs. I'm not gonna be buying the top. If we do pull back to this support level, I think that would be pretty high probability to then look for buy setups. This is what I'm waiting for right here on the Nasdaq. That pullback, break of the high with force, and then a nice high probability entry. But first, I need to get a pullback. Fundamentally, the Nasdaq is very strong. We're getting some good data out of the United States. I'm personally expecting rate cuts. Okay, I know some of you, or not some of you, but some traders think there are maybe going to be just one rate cut. Maybe there will be a pause. I personally am expecting, and I'm betting on 2 rate cuts for this year. Maybe even more, maybe even 3. That's bullish for the Nasdaq. Daily chart looks great, as I mentioned. Very strong, very bullish. Broke out of the all-time high, okay? Broke out of the all-time high and continuing up. One interesting thing that that happened to me is I have some S&P 500 through an ETF, okay? Let me actually see what's the name of that. So let me quickly see on my interactive brokers. What is the name of the position? SXR8. So because I'm in Europe, I have to buy the European ETF for the S&P 500. And this thing hasn't really gone up a lot, you know? We're nowhere near the all-time highs. This is what I'm invested in, and this tracks the S&P 500. So I looked at this the other day, and I was very surprised to see that the price is somewhere in the middle. So compare this, okay, to S&P 500, you know? And that is all because the euro has gained massive value against the dollar. So if you invest into the S&P 500 in the United States, you would have made a lot more percentage than if you invested in the S&P 500 here in Europe through euro. Because the euro appreciated a bunch from the bottom to the top, around 15%, you're not going to feel such an explosion. But that is interesting to see, and that means a lot of this movement to the upside is because the dollar has lost a lot of value, okay? So it's just because, or it's not just because, but one of the biggest reasons is the dollar has lost 11.2%, 0.8%, around 12%, right? So that definitely has an influence on the S&P 500 exploding to the upside. Just wanted to go through that. It's a very interesting phenomenon. And yeah, Nasdaq looking for buy setups. Now, the euro dollar, okay. The euro dollar, very bullish in my opinion. Okay, very bullish in my opinion. It kind of looks similar to the Nasdaq. We're just going up, 0 pullbacks, right? I have my alert set right here. Fundamental analysis is very bullish. Let's check the monthly chart. Monthly has quite a lot of room to reach the next resistance level, which is around here. So we can appreciate 4% more, definitely. We can go up 4% more. But again, I don't want to buy straight on the highs, okay? Croatia. I'm from Croatia. Hey, that's cool. Yeah, Croatia is awesome. You guys should definitely visit Croatia. It's beautiful. Okay, so getting back to it. I'm watching the comments on the side. So getting back to it, we had the breakout. This is the level where I would look for buy setups. Okay, yeah, I don't really want to buy straight on the top. Let's remove this as well. I don't really want to buy straight on the top right here. I want to see price pull back first. Touch the 20 EMA, preferably bounce, get a buy setup. I think that would be nice. We started to pull back a little bit. Is it going to be enough? So this is the NFP pullback. Is it going to be enough to take us in for me to execute a position on the 1 hour chart? By the way, I look for entries on the 1 hour chart. Okay, so is that going to be enough? Maybe. We will see. We'll have to monitor. We will have to monitor the charts. The pound dollar, I also saw you guys are interested in the pound dollar. Pound dollar, very similar story to the euro. Okay, very similar story to the euro. A bit weaker, I would say. The euro dollar is a better bullish play in my opinion. Glenn asks, do you manage multiple funded accounts, Marco? Yeah, so I have 2 FTMO accounts. One of them is a challenge account. I have one Alpha Capital account. I have a Darwin X0 account, and I have my personal IC markets. So it's all done through a trade copier, which is Traders Connect, best copier out there, in my opinion, the fastest and the most reliable. And I just execute on my master IC markets. It automatically gets copied over to all of the other accounts. So I have zero work that I need to do. Okay. I wouldn't recommend Alpha Capital, though. They're kind of sketchy, shady. I think FTMO and the 5%ers are 2 of the best and most reliable prop firms right now. It's a personal recommendation, and it's what I personally use. So I can only recommend what I personally use and have had good experiences with. Getting back to it, the pound dollar, Glenn, the copier was Traders Connect. Okay, here. You have if you go to my channel, I have a video about them. Okay, I have a whole video how to set it up. So just go to Marco's Trading Journey. Okay, it's in the description, Marco's Trading Journey, and search up Traders Connect on my channel. You have a whole tutorial there. Should be pretty helpful. Okay, no worries, Glenn. Pound dollar, I'm not really looking for buy setups, to be honest. You know, because I was looking at the euro dollar, looking at the pound dollar. For me, the euro dollar is a bit better. Pound dollar already had kind of a big sell-off as well. Had quite a lot of momentum going lower, quite a lot of selling pressure. And I think because I checked some of the fundamentals, the euro dollar is more bullish on the edge finder than the pound dollar. So I prefer euro dollar a lot more. But if I had to give you a bias, it would be bullish, okay? We just broke out of this high, or sorry, kind of this. Yeah, we broke out of this high and this high, continued up. I did have a trade on the pound dollar. It was a loss. Let me just quickly see that. GBP USD. Oanda. Yeah, took a loss here before the price went up. What you gonna do? Part of the game. And kind of the final thing I'm looking at is the DAX. I did have a buy position. Right there. Got taken out, barely taken out. Price now continued up. I'm looking to re-enter. That's kind of the way I trade as well. If I take 1 or 2 or 3 losses, it's minimal risk. Part of the game, you know, you don't have a 100% win rate. You're going to take some losses, but it makes sense to just keep trying to get in, keep trying to execute, and then you will catch a buy setup that actually goes in your direction. If I zoom in right here, let's hide this previous trade. If I zoom in, if we get a little bit of bullish price action, a flag, break and retest, or any sort of a technical entry on the 1 hour chart, I would get in here. I would get in on the DAX. Okay, this looks very good. This looks a very high probability. I like this level as well. I think overall we are in a nice uptrend. Europe is doing pretty well. Europe is spending quite a lot of money into its defense. If you look at companies like Rheinmetall, They produce weapons, they produce tanks, explosion up, okay? And companies like this could drag the DAX, the German stock market index, to all-time highs, okay? That's why I like a play on the DAX. I think my time is up. Thank you guys very much for watching. See you guys next week on Thursday. And yeah, stay safe.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, ladies and gentlemen, hope everyone is well. So we had pretty good data today. We spoke about the data yesterday. Again, I really hope none of you got caught off guard because obviously we normally have this data on Friday, but it was moved to Thursday because we do have July the 4th tomorrow. Now, average hourly earnings, not great. We did see a downturn there. However, NFP, really, really good number there. I was expecting positive data. It was actually a little bit better than I did expect. I thought we'd sort of be on forecast or slightly higher. 147, really, really good. Unemployment rate also ticked down, which is really good. Bearing in mind, forecast expected an increase to 4.3. Previous was 4.2. We came down to 4.1. So yeah, very, very strong numbers. We've also had previously pretty good data this week. So we had JOLTS come out well. We had manufacturing come out pretty nicely, still under 50, but 49 is obviously an improvement from the previous and forecast. So yeah, next up, we do have ISM services coming out. Sorry, get my words mixed up. ISM services PMI coming out in just over 10 minutes. So we'll have a look at that when it comes out. In the meantime, I'm still on my, I've forgotten the word again. What's it called? Where you do the opposite of the crowd. Contrarian. That's the word I'm looking for. Still my contrarian view on the dollar. So I'm not sitting super bullish. I think it would be very ignorant for me to be overly optimistic right now because it just doesn't really call for it. But I think some of the pressure to the downside has been massively overstated. So if we just take a quick look, the COT filings. Let me just find that. Where's it gone here? By the way, I'll have a look at the chat in a second. I just want to run through this quickly. Cut data history. So the US dollar is currently the most extreme short, more shorts than longs, which rarely happens. And when it does happen, so when we breach this 50% short ratio or long ratio, we often have a pop back to the upside, which obviously hasn't happened yet. However, keep in mind, COT is a lagging indicator. So this is last week's data. This isn't telling us what they're doing right now. So it wouldn't be a shock to me if we do see next week a reduction in shorts. I'm not saying they're going to flip massively bullish. I'm not saying we're going to see a trend change, but I think we might see a reduction in shorts and a bit more longs added potentially. Again, that's more speculation. I don't know that for a fact yet. The technicals on the dollar are still very, very good. We maintain within this uptrend. If we do manage to break out, I think the next real stopping point would be around 90 because there's just not really any structure from current price down to 90 that could provide much support. The 200 moving average is keeping a bit of support. We've obviously got the trend line. We've got an RSI that's massively oversold as well. So mean reversion or some sort of pullback to the upside, at least to around 100, in my view, would make a lot of sense. Rate cuts for July are pretty much getting priced out, or maybe just did get priced out. So let me just quickly show you July. So I think Marco already covered this, but I'll just do it again very quickly. So yesterday, we can see the chance of a rate cut, or the probability, was sitting at 23.8. It's now reduced to 6.7. So it's almost certain that we'll get a rate hold. Obviously, things can change. Inflation could collapse, or it could heat up massively. So that could change that narrative a bit. September remains pretty likely we will get a cut. I think that's all we're going to get. I am very confident at the moment, the way the data is sitting, it wouldn't be a surprise to me if we get one cut in September and that's it. But again, I could be completely wrong on that as more data does come. Ball out, hello. Tom, good to see you. Sean, hello. Could consolidate. Yeah, that's the other thing. I think the dollar's had a pretty large down. Don't forget, this is the monthly time frame. It's been a large drop with pretty much no, as you said, no room to breathe, really. So it's been from peak to trough, 12.37% drop, give or take, depending on where you draw it, with a very minor one-time pullback here of 4%. And that's pretty much it. So yeah, it wouldn't be a shock to me if we do start seeing some upside as we see a little bit of shorts get squeezed out from the recent data. And as I mentioned yesterday, I think that these markets, the dollar crosses, are still extremely extended and a little bit worn out, like exhausted, really. So the first point, I'm looking for a pullback on euro dollar is sort of to 1.15, 1.145 in that sort of area. I think that would make sense looking at the higher time frames. The daily is very extended. The weekly is also very extended. So we can see here again, similar to the dollar, we've got this 2008 trend that still hasn't, has only just broken, but hasn't broken since 2008. We're pushing up the 200 Bollinger, the RSI is overbought. We're also on a more recent trend line here as well. So I think there is definitely room for corrections, but again, I just want to clarify, I'm not saying that I'm expecting the dollar to rally or to change trends or short-term trends anyway. I think the long-term trend will remain to the upside. The dollar's, the US is a powerhouse as world reserve currency. It's not just going to fall off a cliff. But we could definitely see sort of 90, 88 levels start getting hit if we do see more negative news coming in. That's just my view, though. Of course, build your own ideas. USD might from now be bullish for short term because it was overstretched to downside. Youngest, that's pretty much, that's kind of my idea as well. I think the issue I see is just the amount of shorts that are in the dollar after what I would consider a very positive week for the dollar. Now, the numbers haven't been massively positive, but what I mean by positive is obviously we've had good numbers, but also with such extreme short positions in the dollar, that makes those good numbers a bit more relevant in my view. I think we are going to see that little bit of an unwind again, not a trend change or a massive move to the upside, but I just think we are due some sort of upside on the dollar, whether it just be a natural pullback or whatever. Either way, I'm quite happy to take some short-term, low-risk longs on the dollar and just see how it goes. Like euro dollar, for example, I would actually very happily take a short position, not just yet, probably on Monday. Obviously, we've got July the 4th tomorrow. I don't want to trade into a US holiday, but I'd be quite happy to just take something like this at half risk, so 0.5, 1%, with a take profit, maybe just at the most recent low, which would be, actually that's pretty wide, isn't it? That's a weekly time frame. Sorry, let me move to the daily. I didn't mean to put it on the weekly. So take profit maybe at 1.14, I think would be reasonable. So again, not actually going to take this just yet, but it is an idea that I might start looking to build, or might begin looking to build. Okay, so let's move on. Euro pound, I'm still sat in this short. It's been very stubborn. Obviously, we had the UK come out with some nonsense yesterday about what was it? I can't remember what it was, something about disability payments, healthcare payments, or something like that. Either way, I don't really care. This isn't really a fundamental trade or a short-term fundamental trade. It's more of a mean reversion and historical price movement trade, if you will. So far, it's not really doing too bad. I've got 3 positions open, all low risk, cut losses. I've got room for one more additional position. So if we come up to the recent high, towards the recent high around here, I can allow one more position in. I'll cut losses here, which is calculated to be a 1.5% loss overall if I have to cut all 4, which to me, that's completely reasonable to have 4 different positions. New Zealand yen is one we sent, or one of my traders sent to the Discord. I didn't take it, unfortunately. I missed the call, but this one is open for our team. But yeah, there's not really anything to discuss. I'm not in it. It wasn't my trade, so I don't really know exactly what was going on there. It seems like we are having a bit of a correction here on dollar pairs, though. US dollar yen had a nice pop to the upside with a bit of a correction coming. That's very, very normal. When we have quite aggressive moves in the markets, whether it be from news or geopolitical, whatever it may be, generally we do see a correction. Now, the DAX, I was looking at the DAX. I've been watching this one all week, and it did come down to entry, but I wasn't at my desk here. So I was considering taking an aggressive entry. But then again, the problem is we had NFP, we had unemployment, we've got July the 4th tomorrow. I just wasn't comfortable opening a new position at that or at this morning. So if we can see a little bit more downside temporarily, I'd quite happily look to get into this one. But yeah, I'm a little bit annoyed because I did have 2 opportunities to get in on this 50% level, and I just didn't do it, which is oversight on my part, but it is what it is. Crying at Parliament. Yeah, you know what? I watched that video. And I didn't realize she was crying, actually, until I saw like a highlight of her tears. I felt really bad for her. I mean, I don't like her, but I still felt quite bad. Imagine having the whole country laugh at you. I mean, I had a few guys on stream laughing at me, and that almost made me cry. So I can't imagine doing it in front of the whole country. Yeah, feels bad. 400 points profit on that New Zealand yen trade. Sean, are you in that New Zealand yen position? I'm a bit annoyed I didn't get it. I'm at the stage where you follow the system no matter what. This is the hardest thing to do. It is, but it also simplifies trading a lot. If you have the exact, or you know exactly what you should do and when you should do it, you can relax a little bit more because you're not really going to get caught out. You don't get in a position where you're like, oh no, I didn't know this was going to happen, or I didn't plan for this or whatever, because you kind of get to that point where it's all pretty simple. But then, of course, it's easier to get FOMO. It's like, oh, if I just broke my rule by 5%, maybe I could have got this whole move on NFP. But of course, that's never a great way to think, is it? He tried to laugh at me every day. Yeah, fair enough, Sean. That's completely fine. Okay, right. Let's have a quick review. What's on the Edge Finder? I think Eurodollar should have dropped down a few points. Yeah, so Eurodollar's gone from very bullish with a score of 10 down to just bullish with a score of 8. So if we can see this start to drop off, whether it just goes back to neutral or it drops down to maybe a 5, 4, whatever it may be, that might be a signal that I want to get into a mean reversion trade short Eurodollar. I saw Marco talk about silver, which I want to cover actually, but I've just remembered we do have news coming in 1 minute. So I'm just going to quickly have a look at silver. Then we're going to go back because I do really like the silver idea. You know, I've been talking about silver for maybe months. I'm not 100% sure, but I've been talking about $40 on silver, and I've not really managed to do anything with that idea. But I think this market's really stretched right now. We've had a huge run here. And this is a daily time frame. So we've had from low to high, we've had a 31.43% gain with pretty much no pullback. We had a bit of consolidation here, but we're above our 200 Bollinger, which, you know, a Bollinger, I've started using the Bollinger quite a bit recently. It's more just to gauge, do I want to buy here, or is it a bit too extended? Is it a bit too overbought? It's a bit like the RSI. It's just to sort of filter some trades. In this situation, I think silver is just too high to buy, in my opinion. I would really want to see this 50% pullback, which would bring it back into this consolidation range, retest highs, whatever it may be. It would also meet this 200 moving average, and I think that would be a great opportunity then to get into a long position and hold that one for however long it takes. I'd be quite happy to hold silver for a couple of months if that's really what it required to reach 40. I'm certain that's where we're going. Whether it's this year, next year, you know, I don't know. I don't really care how long it takes, but yeah, I'm happy to get into silver if we can see that. Here we go. We had services PMI come in at 50.8, along with the other data beating the forecast and the previous. So we are seeing a bit of expansion. So we've had manufacturing that beat, came up to 49. Again, not quite 50, but it's still an improvement. And now we've got services that has popped back into expansion. Obviously, we were at 49.9, and now we're at 50.8. So that's great news for the dollar. So let's just take a quick look. I don't really see any movement actually here, although I am on the, yeah, actually it's moving down, 12:30. Yeah, it seems like we're not really seeing much of a reaction off that actually. I mean, it's not really that far off of the forecast, so it's not I wouldn't expect a huge rally off the back of that anyway, especially after we had a pretty good NFP and unemployment reading. So that's fine, but it's still a tick in the box for the dollar in my view, so I'm quite happy with that. Let me just quickly catch up with the chat. Sorry, I feel like I'm the head level is a bit off here. I'm currently selling everything. I'm selling all of my equipment because obviously I'm moving. So slowly you'll just see things disappear. And at the minute it's the camera. Okay. James, memory serves me right. You have a birthday coming very soon. Lee, that is an incredible memory. I do. My birthday is on the 7th of July. I'll expect a PayPal donation for a happy birthday. Thank you very much. Looks like, look, pound Swiss, good short setup. I'm not sure if I'd want to go short on the pound. Let me just check. Let's just get rid of the calendar for now. We don't need that anymore. Let's go to neutral. Is pound Swiss even on here? Oh, it is actually. You're right. Okay, maybe. Okay, let me just have a quick inspect here. Oh, wait, I'm on the wrong chart. Daily, as I said, it just looks a little bit too low to buy. If we could come up slightly higher, whether it be a 50% retracement of this move or to this 200 moving average, both of those conditions would allow me to go short. But yeah, the daily just looks a little bit too oversold right now. The weekly looks fine. And the H4 also looks like it could come up actually. So I think this 50% level would actually be the perfect spot. So this is 50% of the daily high and low, which would then line up with our H4 200 moving average, which might sound like a lot of words, but that is actually, it's pretty simple. Take profit could be either pretty conservative at the high here at 1.11156, or if you want to be a bit more aggressive, you do have an option for it to be quite tight just above the recent highs here. That would allow a 1 to 2.67. The edge finder is bearish seasonality. Retail is long, so nice contrarian signal there. COT is pretty flat, not really seeing a reading there. GDP trend. The only thing against it actually is services. Obviously, we've got retail sales and employment, manufacturing, and COT. They're flat, but it does seem like it's got potential. So I would be looking for this. This is, in fact, I'm going to put this on the watch list because I don't really watch pound Swiss, but I quite like this idea. So yeah, I'd be watching for this 50% pullback. Keep it very simple as always, and then look for a continuation to the downside. I quite like that. So, oops, I didn't mean to get rid of the drawings. There we go. Sean's a nice guy. I'd never laugh at you. You don't know Sean well enough. Happy early birthday. Thank you. Don't eat yellow snow. Wasn't planning. I wish it would snow though. It's too hot. I don't like this weather. Eurocard gold. Okay. Let me just quickly. Okay, so I've got about 10 minutes and Chris Paul was coming on, so that's fine. I've got time to cover these markets. So gold is tricky because it is, from a technical view alone, it's very overbought. It's very, very extended. But that doesn't mean it can't go higher. The thing is with gold, you could have said the same thing here. It's broken out of the Bollinger. The RSI is overbought. It's going to come back down to the 200 moving average. You could have said the same here. You could have said it all the way up. So I am very reluctant actually on gold to be looking for too much of a pullback, because if I was doing that for this whole time since 2024, it would have been an absolute mess. So I think the easiest thing to do on gold is either just not trade it or be a buyer. And obviously, if you see a catalyst for it to come lower, then obviously you could start shorting it. But as it stands right now, I think it's tricky. It's a very tricky market to try and sell. I don't think there's any edge finder reading for gold. Let me just check. No, it's completely neutral. It's a -1, so that puts me off buying it as well. We also don't really have any geopolitical reason to buy gold. I mean, Middle East is pretty much done in terms of their conflicts. Russia, Ukraine's already priced in. That's old news now. What else do we have? I think that's it. What is there to drive gold higher? Obviously, we've got the rate cut narrative, but I really don't think that's coming until September, and I also don't think that's enough alone to drive gold to new all-time highs. It might be a nice intraday play, of course, but yeah, I'm not really looking to be involved with it at the moment. Dollar weakness, Cedric, yeah, that lines up with the catalyst, though. Obviously, if we get news, a progress in news to drive that, then yeah, of course. But as things stand right now, I'm just not interested. Don't you like the heat you moved to Southeast Asia? The thing is, Sean, in countries like Asia, the US, Australia, you get AC. The UK doesn't have AC, so we just have our homes, or all the buildings in the UK, for anyone that doesn't know, are built to keep heat in. Our insulation is very, very good because the UK is typically very cold. So when it gets hot, it's awful. It's horrible because the heat just stays. It doesn't go anywhere. Let me just catch up. You guys talked right through the news drop. Well, we don't really have that much going on. Let me pull up the DXY again here. Yes, there wasn't really anything to talk about. Obviously, we had NFP unemployment with positive news, and we've also had services with pretty good news. The really only downside, I would say, obviously ADP was a big miss, to say the least. I mean, negative 33K was really bad, but ADP, who really cares about ADP? And we also had average hourly earnings tick down, but I think we've had enough good news this week for the dollar to be relatively supported for now. And I just really don't think we're going to have any rate cuts until September. I've been buying any major drops at support and taking 50 pips profit in and out. On what, Cedric? On gold? If so, very, very nice. You know what? Actually, from a technical view alone, I'm just going to get rid of all this. This looks like a really good long opportunity. Now, again, I'm not going to take this because I don't want to buy gold. But just from the technicals, I like this. So we've got a very, very bread and butter setup here. We've obviously got a low. We've formed a higher high. We've also technically either an equal high, higher high. I don't really care about that. We've also got this higher low now. We're bouncing off our 200 moving average. So just from a very simple technical setup, this looks like quite a good opportunity to go long. But for me, there's just not that fundamental factor to drive gold right now. James, is supply and demand a good way to trade? Yeah, it's pretty much how I trade. I mean, to be honest, I don't really know what the difference is between supply and demand support. I'm fairly sure it's just the same thing. It's just different words, I think. I mean, I've never really noticed the difference. So yeah, it's a case of looking for higher time frame levels where prices previously respected, whether it be weekly, monthly, daily, and then trading, or in my case, I trade the H4 around those levels. Word salad? Me? Don't have that problem in Ireland. It's like 13 degrees all around. I'm a bit jealous. Youngest millionaire. I do like the idea of being short euro dollar. It's just it's very hard to be a seller right now unless you are either happy to hold a drawdown for a while, or you've got enough capital to just continue to accept losses until you are right and catch that larger move. Euro dollar will fall. It's inevitable. It will fall eventually. It cannot just run forever. It's just like any other market. The concern for me is 1.2. I showed a thing yesterday on stream, and I don't think I can find it today. Actually, I was up in my Discord channel somewhere. But yeah, it was like it's from the ECB, basically in a nutshell, saying that 1.2 is acceptable. The price level of the euro is, the value of the euro is not the problem. It's the speed that it's gotten to that value is the issue or the concern. and anything above 1.2 would be very difficult to deal with. So I think if we do end up coming to 1.2, that's where I would start looking for that mean reversion short. And I wouldn't look at the technicals. It would be a case of I would just short, very low risk, but I would just do it with a relatively large stop. And then obviously when it starts moving in direction, I could look for scale-ins, or I could DCA it as well. Or, you know, you've got the current setup, which I'm also looking at here, but this one so far is proving to be a little bit of a tricky one. I already ran through it, so I'm not going to discuss it too much again. But obviously, you've got this trend line here, which is a shorter term trend line. I say shorter term, it's still a weekly time frame, but that's within this 2008 trend, or the trend that was established in 2008. Both of them so far are being relatively respected. We are seeing rejections here, obviously after positive US data. We're rejecting the top of the 200 Bollinger Band. The RSI is overbought. So yeah, from a technical view, a mean reversion down makes so much sense. But again, you know, there needs to be a reason for that to happen. It's not just going to happen overnight for no reason. I went long New Zealand US dollar at GP. Let's have a look. Got a couple of minutes, and then you've got Chris Pulver coming to take over the show. Okay, let's see. So you went long at 0.6327. Oops. Was that right? Let me just 0.6327. Wait. I think you might put that price in wrong. So let me do this. I assume you're missing a 1. 0.61327. I don't know. Anyway, whatever. Okay, there you go. Right. Let me just fix this. So 0.6022327. Right. Okay, that makes more sense. Let's see. Let's see higher time frames first of all. I think the weekly still got room to the upside. We are coming into this weekly 200, which could be quite a nice resistance. I mean, we've seen it act as a resistance previously right here. So you've got two options. You could either take profits at that 200, or you could look, you know, if you're wanting to hold it for a longer period of time. Let's just see. What do we have? Yeah, you could look to take it back up into the daily high potentially, but that's of course assuming that you're a bear on the dollar. Longer term, let me just push this back. Yeah, so if you're looking for the dollar to break out of the upside trend and come down towards 90, I think that this New Zealand dollar play could be a really, really good one to be in. Actually, I quite like it. So I might look for that as well, or something similar if we do start seeing more catalysts for downside on dollar. Well, we entered. I'm not sure what you mean by that. Euro pound is good long for short time. I'm short Euro pound. Let me pull that up for you. So this is my position. So I've got a stop or a mental stop set here just above the previous daily high. I'm looking to really just catch a mean reversion. It's very simple, but it's very low risk. But yeah, I think, to be honest, the fundamentals are bullish for Euro pound right now, which is obviously completely fine. So if that's the trade you want to jump into, I think it's completely valid. I'm hoping we can get some sort of pullback here on New Zealand yen so I can actually get into the trade, because it looks really good. I like the idea, but yeah, missed it, sadly. Let's see what else we've got. Tesla, unfortunately, didn't come down to 240, so I'm still sat on the sidelines on Tesla. DAX is running up as well. Missed my DAX trade. I'm not really on it at the moment, am I? Yeah, so that's kind of it when it comes to me. James, your MA 200 SMA or EMA? I always use EMAs. I don't really see any difference. I'll be completely honest. I think they're pretty much the same thing. I was just, the way I was taught to use them back in the day, it was just always EMAs. So that's just what I stuck with. Thoughts on dollar Swiss? So yes, the link via Telegram. I don't have a Telegram, my friend. I've got a Discord that's $15, and that's it. That's all I've got. I got rid of my Telegram because I'm just trying to consolidate and stay small, I guess is the word. What are we talking about? Oh, dollar Swiss. Okay, let me just pull up Edge Finder again. I'm fairly sure it's one of the most bearish readings. Yeah, it is. So it's the most bearish reading actually down here. Let me just log in again. Oops. So what do we have? Bearish seasonality. Retail is incredibly long. COT is flat. Everything else really is in favor apart from an unemployment rate. So I do quite like this further to the downside. I was looking at this trade yesterday, but of course with NFP today, I didn't want to really look too hard at actually entering the market. But the only sort of entry I could find short term was this. So it'd be back into previous structure, using the fib to sort of gauge a 50% or a 618 pullback, following this 200 moving average. And the trend is obviously very, very bearish. So I think shorts make a lot of sense. You're following the trend, you're following the macro or the fundamentals. But again, I'm just very cautious of this dollar at the moment. I think we might see a slightly higher price before we start heading any lower. So that puts me in a position where I'd actually prefer to get into dollar Swiss at 0.83. Ballout's back. Hello, Ballout. Hope you're well. Oh, I did have a request to look at the Nikkei as well before I came on. So I'll have a quick look here. Although the Nikkei is not my expertise, I don't trade the Nikkei at all. But yeah, we can have a quick look. It's got a score of 5, so it is bullish. But 5 is just not that relevant, to be honest with you. I normally avoid if it's got a score of 5. We are also sort of flat on the longer term view of things here. Obviously, we had a huge downturn during the tariff debacle, if you will. So I'd just be a little bit cautious. Are we going to sort of just stay in this range and flip-flop around? If we can see a decisive break above and we see this sort of overall uptrend continue, I think buying on the break would be quite a nice idea. On the other hand, I think a better idea would be waiting for a 200 moving average pullback, because the issue is, or the issue I see in my opinion, is if we break above and hold above, that still puts us in this sort of overbought situation with the Bollinger. And again, just using that as a filter, I would much prefer to see a pullback and then continuation rather than a break and retest in this situation. DXY will fade. Yeah, I do agree in sort of the medium term, but short term, I could definitely see a short squeeze coming or pullback. Again, wording doesn't really matter, but yeah. Thanks for your insight. No problem at all. Look at ETH. I can give you a technical view, but again, crypto is just way out of my scope of knowledge. Okay, let's see. What do we have? To be honest, ETH has just not really done anything, has it? It's sort of just ping pongs up and down. Let me see. So we're back above the 200, but I don't know. It gives me a bit of a bad feeling here, to be honest with you. We're coming into this 50% level. So it depends. If you've got a reason to short ETH, which I don't know because I don't trade crypto. But if you've got a reason, this technically makes a lot of sense, actually. On the other hand, if you are one of those people that's just bullish on Ethereum, you're bullish on crypto, I would be looking to pretty much just do the opposite. So I take a fib from the recent low to recent high. We've already had this 50% pullback, actually. So yeah, I'd be looking for any pullbacks really to just buy, whether it be back in this zone or back in this 50% level. Again, very simple stuff. Check gold. We've done gold, so I'm just gonna. Oh wait, hold on. Just seen we've got Chris to take over the show, so I'm not going to start a new chart. I think that'd be unfair on him, guys. Don't leave when I leave. Chris is coming to take over. You're in great hands with him. Have a good one. Thank you for having me as always. Enjoy the rest of your day, and we'll speak very soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What is happening, everybody? Happy Thursday. Markets are going to be closing up early today. Markets are bullish. Here's the rip. Non-farm payroll up for the week. I mean, again, big week, and honestly, most of the direction is on today's gap. To me, this has a little bit of like a blow-off move. There's the low of the week. It's up around 1.5%. Seems like it is bigger, but that's just because we had the gap higher today by like 0.3, 0.4%. I'm looking at a trade this morning that as long as I stay above this yellow box, I've got some profit rolling in. I'm in some profit now. I'm trying to hopefully see it get into some of these resistance levels. 62.75, 62.80, possibly a run into this is like an August gamma level at 6,300. I don't know if we're going to hit that so early, but we're about to find out. On the day, I would expect today's high to be maybe around 62.85 to 62.90, just based on the VIX. So I may, two things. One is price runs up into my levels. I'll probably take the profit out of this trade versus letting it go all the way to expiration today, which is around 1 p.m. Eastern time when everything settles. And then two is if I'm willing to have the courage to short by the end of the day, maybe I try to short like a 62.90 or 95 and see if I get a couple bucks out of that as well. Probably not necessary. It's been a good week. Overall, like fresh highs in the portfolio. Had a bunch of winning trades this week. Just closed out a nice winner on the QQQ. Took a 111 on the QQQ, which was way down here. Basically, that was a bear put spread with a naked put, and I pulled in about 90% of that max credit. Made about $154 on that trade. I mean, overall, like no complaints. Up on the day, P&L's looking pretty good, and I just continue to monitor my expirations and watch. So this is the trade I'm talking about here, up around $40, and hopefully you'll see $50+ shortly. I might let it go a little bit longer, but I'm okay with just taking the profit, moving on with like a 15% winner. So I'm not surprised that the market's just taking this all in stride. The news this morning, non-farm payroll numbers came out pretty solid. Forecasted for 111, came in 147. The average earnings wasn't super awesome. I mean, 0.4 previous, now 0.2, but unemployment rate went down to 4.1. Jobless claims also a little bit better at 233. So, more data next week. One thing I do want to bring your attention to is how this market has run for a lot of days since the trade war, the ceasefire. Okay, so this little pop here from this low to high, it's up like 5%. And this market has made like a 5% move, 5.5% move since the ceasefire announcement. The ceasefire was this gap, right? So from this low to high, we have 1, 2, 3, 4, 5, 6, 7, 8. Today's candle number 9 from this push. So 9 candles, 8 of which are bullish, pushing the market up about 5.5%. Okay. So great. But now what? I think we have a pullback. And, when, well, I found an interesting spot here. You remember what happened last summer during July? Okay. Last summer, July, we had, this would have been the pullback. So we got into about the halfway point of the month. And then by July 15th, 16th, we topped out. We ended up going lower to finish up. Look at the month of July. Let's go monthly candles. Let's go July of last year. Let's go back a couple of Julys. Let me go to a blank chart so this is a little bit easier to read. Okay, so let's go SPX monthly. April, this is 2024. So here is July. So I'm just going to highlight this candle. So we started out 5470 all the way up, faded back down. The market finished, pretty quiet for July, but that started off with a ton of volatility in August. I mean, the monthly chart doesn't really show it or give it justice because we did have a high to low, which was around 10%. That high to low move was 9.7%. We topped out. We had the SOM rule activated. The Bank of Japan was, kind of deleveraging. That was the trade heard around the world there for a couple of weeks. But the market bottomed out August 5th and never looked back. Okay. So my point is, are we going to, finish July with a big green body, or is it going to be some volatility going into July, August? So that would be, last year had correction written on it from the halfway point of July. Let's go to 2023. July 2023, there's May, there's June, there's July. July 2023, just a bullish month. 4445 up to 4494. That was a July move of around 3.25%, 3.33%. So just a pretty steady month. And then August, September, October pulled back in 2023. So look, I mean, if we don't have a pullback starting in July, I would be incredibly surprised to see August, September, October of 2025 not offer some reasonable, if not meaningful, pullback. Truly. So, look, we survived April. May melt up on the hard pivot. June, just more of the same. Trade war agreement, trade pause. Nothing's being said that's negative. We have a ceasefire agreement coming in, June, and then July is just a bullish month. So there we are. So do we hit some levels here, like end of July into August, September? I mean, where we are for the year so far, I believe, I'm not mistaken, we started the year off here. So here's January. So right now we're looking at year to date. S&P's up around 6% year to date. Okay, QQQ. Started out, here's January. A little bit more volatility on the Qs, but the Qs are still up around 8% for the year. So still single digits. But the U.S. is now kind of reestablishing like, hey, U.S. has some growth potential. Does the world benefit from it? Yes, no, maybe, probably. Here's DAX. Let's go year to date. I'm just curious now if the U.S. is catching up with some of these other non-U.S. plays. January still up. I mean, it's still up a lot. January had such a big rip non-U.S., that big rotation. We're still up around 20% on the DAX. So the S&P and the Nasdaq both have some big catching up to do to match what the German DAX has done so far. Look at the FTSE. Similar thing. Here's January. Obviously, tons of volatility in April, but that January out of the gates was such a big rip that we're still up around. Well, I guess FTSE's not as good. DAX is up 20+%. FTSE's up 8%. How about China? China for January, right here. China is up around 20, almost 21%. So China doing well. Germany doing well. Let's go India. Let's go top 50 India. Okay. Started here, was down about 9%, fought back, it's up 5%. Does India have what it takes to get up to highs again? Possibly. So here's where we started in January. If we get to the all-time highs, that'd be India up around 10.5%. If I go to Brazil, so EWZ, I'm just looking non-US. Starting in January, right here, you can see a nice start to the year. Brazil for the year is up 30%. Emerging markets have come out swinging this year. I mean, pretty much at a low. This was a good spot. I mean, I've owned EWZ into the low 20s. Obviously sitting on drawdowns for a while, but doing okay. And now ILF, Latin America, same thing. Started here in January, up around 26, almost 27%. So not all things are crushing the U.S., but DAX is doing pretty well. Eurostock's doing pretty well. FTSE's keeping pace with around 8%. But the U.S. is climbing. U.S. is climbing, looking better, looking more resilient. 6% in the S&P, 8% in the Nasdaq. The Dow can still play catch up. The Russell can still play catch up. Market breadth is looking a lot better. S5. There we go. There. Let's go to the daily. Okay, market breadth here. So 70, almost 75% of stocks in the S&P are above the 50-day moving average. Let's go weekly chart. Okay. Another thing that I'm curious, like, does this push up enough to give us a bit of a pause? Right? Meaning, like, does every stock show up like, hey, 91% of stocks are above the 50-day moving average? Well, is that a timing indicator to short the market a little bit? Maybe. Maybe start locking in some profits, and maybe start moving some stop losses. That has been a pretty good timing indicator for at least some locks, and then you can obviously buy some more dips if you're still liking the trajectory. But remember, we got a great opportunity here during the scary times in April to buy the market. I was just hoping that we had a chance to buy the market, which we did. This is why I was selling a ton of premium in April, but I was hoping we had a time to, sell all that premium, get a dip, and then go with it. But instead it was just here and off we go. Like a lot of stocks just did that, right? Meta did that. Microsoft did that. I mean, a lot, they all did it. Like Palantir, Carvana, Hims, like they all had crazy lows and they just ripped all the way back to highs. It's fine. I mean, you can't time the market perfectly. It's really challenging, but I can't complain about making money. It's just I'm sure like everybody else does, like, oh, I wish I could have been more aggressive. Well, yeah, I wish I was too, but I didn't know the severity of a potential global trade war. To me, this doesn't feel like COVID. Like COVID was like a 10-year discount offered in a month. So I bought everything. And once we got out of that, then it was easy to hold on to those positions a little bit longer. It doesn't make me feel warm and fuzzy to hold on to positions right now. What makes me feel warm and fuzzy is making sure that I've got good positions. I'm playing with a wide margin for error, and I'm still generating income and gains, and lowering my cost basis and just doing better portfolio work while having potential downside risk, but also watching hedges turn to crap right now. Like all my hedges are just worthless. But they're there if I need them. They're out to December. I'll hedge again into next year. We'll see. But anyway, market breadth wise, maybe this is a bit of a timing indicator. If we hit 90+% of the S&P above the 200 or the 50-day moving average, if we start to see a lot, I mean, another major indicator would be here. If we somehow see that above the 200-day moving average, 80+% of stocks, between 80 and 90% of stocks on the 200-day, like that is top city 101. Like we're going to start to see some tops here. It wouldn't surprise me. But more importantly is bottoms. Like these bottom indicators have been so good for timing the market over like a 30 to 60-day window. Nasdaq is about 77% of stocks on the Nasdaq above the 50-day. And on the 200, we got a big thrust above the 200. Here, the last 2 weeks of trading, we're getting a lot of movement in tech, a lot of movement in Nasdaq. So 73% of Nasdaq stocks above their 200-day, which shows some pretty good market breadth for the stock or for the tech side of things. And then above the 200-day on the S&P is about 59%. Okay. Meanwhile, take a look at your indexes to catch up. Dow doing some quick work here the last couple of weeks. I think this is also another reason like the markets continue to melt up higher. The Dow has played catch up where we're nearly back to all-time highs. So again, right before that ceasefire agreement, the Dow was at 419. Now it's at 447. This should be, I think I have a couple 1-on-1s. I don't know if I closed these out yet. Let me check. I think I did. I've got some shares. That's up. That's fine. So, okay, I closed out my 1-on-1s. I had a bear put spread plus a naked put that was down here to like 385. And I closed out like 90+% of that max credit. That'd be almost like 100% as this thrust is happening. The Russell also making a higher high. We're at 222. And I'm just doing boring old stuff like selling covered calls. So I've increased my profit potential on the Russell by $2.05. It's fine. Let's take a look at the heat map today. We've got 63, almost 64% of stocks in the S&P advancing today, led by some familiar names. You're seeing a lot of green in the tech space, semiconductors, Mag 7. Big enough stocks. When you got the big boxes on this heat map, those are your market caps. So, I mean, Microsoft is green, Nvidia green, AVGO top 10 over $1 trillion, Apple, Amazon, Tesla flat, but Tesla had kind of a volatile week. It was down 5%. It was up 5%. Financials doing well today. What's down? I mean, we got some chop going on in healthcare. UNH, where's UNH at? UNH is still up 311. I've got a 260 ratio spread on that one. Industrials, aerospace doing pretty well. There's Boeing up to 216. GE Aerospace, RTX. So, where's any like shining red sectors? Not really. I'd say real estate's down slightly. Anything on yields today? So yields are up for the last 3 days. And we have TLT bonds are down. This was a discussion I had yesterday in class. So I sold another leg of my diagonal spread for 89, going out to, I think, the July 18th expiration. I'm just going to keep lowering my DLT trade. Mag 7, Mag's up today. Possibly, I mean, maybe this gets up to all-time highs. Maybe Mags gets all-time highs. Apple's looking better. We've got 3-4 days in a row in Apple. Amazon back up to intermediate highs. Broadcom right back up towards highs. Google hanging in there. A lot of resilience at the 150 mark, which is where I have my ratio spreads, 135 and 100. Meta just off all-time highs. Microsoft still climbing higher. Netflix with some overbought conditions, likely. I mean, I'm guessing that we're going to have a dip or a pullback, that Netflix is still a good buy. It's just I'm not super stoked about trading other than like a controlled defined risk spread. Buying shares of Netflix would be fractional. It's like I'm not interested in, buying 100 shares at $12.95. So if it splits, maybe, but I don't know if it's going to. So until then, like any dips and pullbacks, probably fractional ownership of Netflix. Nvidia, we did a pretty good job like clearing this 153. I mean, what a comeback in this stock, huh? One of the biggest companies in the world, having an 85% rally. And you look at this price action, like this is the type of stuff that was tricky for everybody. This market was up, down, and there's your breakout, and it never pulled back. Like if this is a cup and handle, you go up, you go down, you break this handle, you measure the move. Like all it did was pause. All it did was pause. Like we didn't have a pullback. It didn't go, pushing up here, then pulling back again, then pushing up here, like that kind of typical wave structure you'd like to see. It was, once it was up here, all it did was pause. And then it was higher and higher and higher, and it's gunning for all-time highs, and it got it, and it exceeded it. I just took profit on my SPX trade this morning, so I'm going to close that one down right here. That is 10:38 a.m. Eastern time. $585 credit, closed $535 debit. So that puts me at, for the week, what was this week's trading? The 30th. So 1, 2, 3, 4, 5, 6, 7, 8. 8 for 8. Not bad. All right. Tesla 314. Kind of choppy, kind of sideways, but the good thing is we are on the right side of the trend line. Tesla, typical price action is probably going to look something like that. Very volatile. Nobody really knows what's coming next, but if it catches bid, Tesla looks pretty good. What's the next big thing? Robo-taxis, humanoids, profit margins. I don't know. I mean, we have earnings. I think they're in either late July or August. It's going to be July 23rd. So that's going to be something to pay attention to, along with other Mag 7 earnings. I think that Mag 7 earnings have to do pretty well for the markets to really embrace, like, we got another quarter of higher prices. Okay. But meanwhile, I mean, the premiums are still pretty good. I own shares at like 230, and yeah, I mean, my cover call is not great. I mean, 230, I've got calls at like 265, 260, 275, 280. I'm just continuing to roll them because if price is going sideways, it just gives me time to kind of catch up on the covered calls. I'm not letting the stock go. I want to keep the stock. I want to keep rolling it. I'm way in the money on those covered calls, and I'm going to continue to do that. I'll just keep rolling it and get an extra somewhere between like $2 to $3 every couple of weeks. Berkshire Hathaway. I mean, it's interesting. We're sitting at all-time highs. Berkshire's not quite there. I don't mind this trade, like a defined risk Berkshire trade. Let me see if this actually pays pretty well. I don't want to own the shares. So a credit spread's kind of out of the question. A ratio spread is kind of out of the question. Maybe look at a debit spread here. BRK. If I go Berkshire B, if I were to buy, let me see, a debit spread. I'll try to split this like a split spread. So if I went out through earnings, August 15th, I mean, I think it's subject to like the markets pulling back, but maybe going out to the end of the month, August 1st earnings, July 25th, August 1st, maybe this pops up here. Okay, so if I buy like a 480, sell the 490, I'm trying to get like some equal, so I'd have to pay, I mean, I pay 588 to make 10. I don't know. I'd almost rather do like a butterfly spread. Let me see 1 second here. Butterfly call spread. If we can hold, I don't know if the premium is going to be good in this or not. If we can hold like the 475 zone. So we hold 475. You're going to charge me a debit for this broken wing butterfly? You've got to be kidding me. Oh, never mind. Put spread, duh. I was like, what is happening? Let's put this down to 75. All right, so I get 40 cents on that trade. Maybe there. You know, it's like, do I love this trade? Not particularly, but if we stay above 470 through August 1st, I can still make 70 bucks on the trade with a profit trap of $500. So, you know, that gives us a little bit of buffer. If price were to drop, let's go down to 470. We've got a $5 profit trap by August 1st, which is earnings day. That'd be below this recent low. I don't know. I mean, it's, if it was a better, like this is not great premium. You know, only pulling in 68 cents is not that exciting. If this was like $1.50, maybe more willing to take that trade. It's about the only way I'd think of playing it though. Otherwise, the call side, you're paying more in premium than you get in a reward. So pulling in some credit, having a profit trap, going out a couple more weeks might not be terrible. I don't know. I like it, but probably not enough to take the trade right now. All right, let's talk some other stuff. Let's talk dollar index. Let me double check my calendar. All right, should be good. Okay, dollar index. As I said, don't keep shorting the dollar. I think it's going to catch a bid. We pretty much hit the measured move. This yellow box represents the symmetry on that major swing. This isn't something I'm just like, hey, buy the dollar. I don't like the dollar. What I like instead is don't short the dollar. Wait for this thing to show a little bit of a relief rally, maybe a 100, maybe a 101. Look for confirmation to fade this and roll this thing over. Okay, I still think the world is loving the weaker dollar. I think that's probably why we have so much of the risk appetite hitting the markets right now. But I just think this is a silly trade to be forcing a short. We don't typically see currency markets that act so permanently one direction. So if this is oversold with some divergence and it's crowded, then we're probably going to have some type of squeeze. From there, let's see if we can hit the daily 200 moving average area and then roll over. And then, yeah, we can resume the sell trade. Get down to 90. Like, I'd love to see a target at 90 on the dollar. There's a lot of pip opportunities there, but I'm just not going to sell the dollar at these lows. I've been cautious of that for the last couple weeks, right? You go to Aussie dollar, it looks like it's an open space. I'd still be looking for some type of pullback around like 64 to 63.50. If you go to euro dollar, we hit highs around 1830. I think this pulls back into maybe retesting, 1570, maybe pulling back deeper, maybe a 13 to 1200 test. I wouldn't really short this until we have better price pattern at the top. If this comes down, maybe you get some type of like wedge formation and then it breaks the trend line. Maybe that's a good opportunity there, or it just kind of rolls over. If it rolls over on the trend line, pulls back a little bit, fade the backside of that trend line, short the neckline, measure the move. Nothing magical, just good technicals, waiting for some confirmation. Okay, and I think if you're doing that, risk, having a stop loss plan is probably wise. Pound dollar started a bit of a pullback. We had pound weakness yesterday, but again, nothing that's shown a break of the trend line or break of structure. So maybe this kind of the same thing like this. Maybe a rising wedge rolls over on the right side of the trend line, and just a pullback, like take a low, take a high, look for some simple fibs. 38 or even 30. 30 is not a fib, but 30 is a GAN level. 30%, 50%. Easy, like easy money if it gets there. I just want to see if we can sell it nice and high. New Zealand dollar. Same thing in Aussie dollar. I think this has good open space to the upside. I like this trade going up to these highs. Okay. But having the charts look something like this, maybe a pullback into 59.50 to buy small. We pull back into here, I'd still be willing to buy more with a stop loss below that level. But I think the dollar, especially if there's risk on in the markets, I would think that Australia and New Zealand do pretty well with risk in the market, risk on trading. Dollar CAD, 135.88. I'd like to see if the dollar CAD can settle into like the 134.3 or 2 handle. I haven't looked at oil in a second. Dollar Swiss, just off the lows. I'd like to see a trend line break and maybe a pushback into this pocket around 87 to 88. A lot of that's going to be either dollar catches bid, gold falls a little bit, or the Swiss at 0%. Maybe there's a bit of a carry trade going in with a lower volatility Forex market. But we still have to break this trend line. Dollar yen, no trade. Dollar yen, if you're lucky, you're getting some structure in here to buy low, stop loss, see if it wants to run up and hit maybe 148, 149. This is going to be a very noisy zone if you ask me. I still think this ends up heading down to 140. I think it breaks 140 eventually. This trade might take a year or two, but if we break 140, I think we're going to 120. 120 on the dollar yen seems like a very doable target. I just don't want to sit here and force a trade with negative swap for however long it takes. There's going to be a little bit more timing involved, but when it does go to 120, it's going to be fast. If we break 140, expect it to drop to 120 pretty quickly. I'd say within maybe 3 months. But we got to get all that confirmation line up first. Okay, currency strength on the day. Let's see. Yesterday, CAD was strong, pound was weak. Today, it is dollar, CAD, pound on top. We got the Japanese yen weaker. Currency-wise, still pretty contained. We haven't had like a big blowout day in currencies for a while. That's probably our bigger move on just the pound yesterday, but I have not seen 100+ on this vertical axis for months. Probably the last time we did would have been during all the drama in April. So, Forex has been pretty tight trading and much less volatility. Doesn't mean there's not opportunities. It's just a lower volatility environment. So, anywho, that's that. Oil. Finding support around 65. Okay. I don't know what's next. I honestly don't even love trading oil. I'm just saying from the trade that I am in, it's a CL trade, so oil futures, and my line in the sand is 50. I think the trade is looking okay. Technically, it's like it might be down in the drawdown position, but yeah, I'm down $50. It's like I should be making about $220 on the trade. It's out to the end of the year. It's defined risk. If I make $200 on it, cool. That's $200 on 15 accounts, so it pays pretty well. But that's essentially saying that oil is going to stay above $50. Time will tell. Natural gas, natural gas is becoming probably the go-to for this whole data center build-out. A lot of companies, energy-wise, are tapping right into natural gas pipelines. I know nuclear is a big talk as well. Nuclear is taking off in a big way. I closed out my shares of URA, which is uranium. I put on some ratio spreads on Oklo. There's some other ones you can follow along with that are benefiting. But I do have a diagonal spread on UNG. Let me find it here. So the 5x17, we're trading at 1534. This is only out to the 11th, so this is technically next Friday. I'm just going to keep selling calls. So I mean, I've got this one out to January, so I just need to be a little bit more aware. Like, we're at the halfway point of 2025. I can't get too cute with this thing. Like, I'm going to try to sell it at 17, my break even on the trade. Let me go to my tracker here. So UNG. My break even on the trade is 14.45. So if push comes to shove, I can just sell a $15 call and let it get called away for a couple of bucks. But ideally, I'm trying to make, $2, $3, $4 to the upside, lower my cost basis. But after the 11th expiration, I mean, you can see here, like, I'm up 94, 95% of the profit. It's probably better for me, more capital efficient, rather than waiting for the extra $8 here, is just roll this. So let me see what this looks like. I'm going to do this right now. If I roll this July 11th, $17 call, I'm just curious. Like, I'm up 95% of the profit right now. If I roll it, so if I roll it out by 5 days, I'm only getting 7 cents. I've got to go out a little bit further in time. 12 cents for a week. Maybe out to the end of the month. August 1st, like, this isn't bad. If I roll it out to August 1st, I get 61 cents. So I can decrease my cost basis down to like $13 and change. Give me a break even on the debit of around $8 and change. And then I'd have a, deep in the money call with a break even around $13 and see if I get it called away at, $17. So can I get like 60? I'm gonna try 65 cents here. Not filled at 65. Maybe 60 cents. Is it worth it? Not getting filled. All right, I'll come back and revisit this one on Monday. So anyway, that's just natural gas. I mean, I think natural gas should be going higher, but if we're just tons of demand, this could be, pushing prices back down. It's just disappointing to see this thing rip off these lows and then have this consolidation. I'm hoping that this is actual structure that's changing. Like, this low, this high, this is a higher low. So I'm hoping that this is consolidation and UNG catches a bid to the upside. Now, if I get it called away, like as it's ripping, that's fine. I'm still making income, but perfect world would be like, I don't have anything in the way and this rips up to like $24 again. But to be determined. I'm also happy just actively taking profit if I'm, making whatever, maybe $3, $4 a contract, and I've got, 2,000 shares worth. So, all right, that's that. UNG, gold, everyone's favorite. Gold is at 33.25. If I'm going to add more to gold, I want to see something in here. If I'm adding on gold futures, adding on GLD, adding any on pullbacks, I want to see a pullback to like 3150 or 3000. 3150 or 3000. I've got naked puts on GLD. I'm willing to own the shares. I just haven't added much to it. If I like to speculate on gold, I like to use gold futures. I just want a better setup. So if we get a pullback, I'm going to use GC to then buy the dip. I'll add shares with GLD. I'll add debit spreads. I'll add naked puts, whatever. I just haven't done it yet. So a lot of consolidation on gold is totally fine. We're in the middle. I don't know if this is going up or down. I don't care. I know that if it comes down, I'm interested in buying dips. If it goes up, I'm going to enjoy the ride. Silver, I still think is better. And hopefully silver will be clearing some highs here relatively soon. I'm going to move this chart alarm up to this high around 37.36. Edit that. Message would be fresh highs. Fresh highs on silver, hopefully. SLV, same thing. Measured move all the way up into the 40s. All-time highs on this SLV up into the 50s. Go to the weekly chart. 2011 should have been the all-time high. Yep, So right around $48. I'd love metals to go up 44%. Silver is definitely one of my bigger positions. SLV right here, up around 38,000 bucks. GLD, probably a fraction of that because it's not as large. I took a lot of profit on GLD last year. Here's GLD, up around $17,000, $20,000. I've got CEF, another kind of play, $5,000. PHYS, add into the mix, that's up $4,000. So I mean, there's some money there. IBIT, this is Bitcoin. We haven't really cracked highs recently. IBIT is where? 62. So we're up to some fresh highs, up 60 grand. But anyway, that's silver. Let's go Bitcoin. Bitcoin's up to 109. Still, the fresh highs are what, 112? All-time highs. We breached it here. That high I'm showing 112 on the nose. So is this it? Like, are we making a run? I don't know. I mean, if we breach the highs, I'm not like super excited about that. But obviously, if it goes and it runs to 125, 130, I'm not going to be complaining. I just wondered if we have a bit more time to accumulate. So is it, sideways here, and maybe it's a chance to participate, maybe it's a chance to accumulate, and then we break and go higher. I mean, coming back down to this level would be a great order, but it'd be like, why? Why would it come back to 75,000? So it doesn't seem to be the case. Risk on trading. If we get risk on trading and this breaks highs, it'd be interesting, like through this tax bill, especially if the U.S. passes a tax bill, adds $2.4 trillion to the deficit over 10 years, weakens the dollar, loss of purchasing power, inflation goes up. Does Bitcoin catch a bid from that? Maybe. So it's certainly behaved a lot differently. There's way less volatility on Bitcoin than there was in the past. This has done a pretty good job of playing catch up this year. Like gold was outpacing Bitcoin by a ton, and then all of a sudden Bitcoin caught up. So I still like it. I'm still bullish. I'm up a decent amount. I'm still going for higher highs. MicroStrategy up to 407. This is good. We've got a chart alarm set at 430. Got a bull call spread that should be paying pretty well. MicroStrategy now. Bull call spread, I needed it to be above the 390 level. So it's up just over 100% of my debit. I paid $350 for it, but it can make up to $1150 in profit. So I've still got another $600 or $800. I guess about $800 to go if I want to hold it. So I mean, $400 profit, $400 profit, $380 profit. If we stay above 390, then yeah, I mean this pays out $1150 by January. So I'm hoping that we do make all-time highs on Bitcoin, and as a proxy, MicroStrategy is clearing these highs as well. I'd be happy making $1,000 on that. Not bad. Coinbase, just crazy move on the stablecoin announcement. Dodged a bullet here with the April drama. Made a lot of money on Coinbase. Just income trades. Didn't own any shares. Didn't buy any shares. Just a lot of ratio spreads. A lot of debit spreads. But what a surge. So any pullbacks in here? I mean, I think this looks pretty good for pullbacks and positioning to stay bullish. This is like the genius bill passing the stablecoin stuff. Or I don't know, be careful, I guess. If it comes into a halfway point, maybe this is a broadening pattern. Right? So if it comes in the halfway point, maybe positioning for owning shares down here. I would own some Coinbase. The premiums are pretty good on it. So if I did a ratio spread like a 150 by 145, stay out of the way, generate the income. If it goes back up to highs, that's easy. If it goes back down, I could take the shares and flip it, repair it. I've got the capital to do that. So I'm not going to do that trade now because we're sitting at these highs. But if we came back to like, let's say 275 or so, we set a chart alarm 275 and look at ratio spread with April lows. Okay. See if that's the play. Let me take a look at fundamentals on Coinbase. Okay. That's not good. So we're trading at 354. Fair value, the discounted cash flow model is 141. Again, I mean, it doesn't mean anything, but it just makes me a little bit more apprehensive. Like, I don't need to buy stocks that are that much more expensive than what they possibly should be for fair value. But as we all know, like there are stocks that can run way higher than price to earnings, higher multiples. People just pay a arm and a leg for them, and they still go up. But it's kind of not really my preference. So I'll probably just stay out of it. Or if I do own the shares, it's going to be like fair value or lower, right? Like the nice thing is the premiums are pretty good. What else? Copper. Dr. Copper looking alive and well, meaning the global economy is still showing some risk on trading. Japanese yen. This honestly, like this might be another like good opportunity, but let's say that Japanese yen is sideways here. I might want to get long in the futures market. I don't know how far can I go out on Japanese yen futures? Let's find out. 6J. How far out can I go? March of 2026. It's not far enough. Trying to think. Let me go FXY. January 2027. Is it possible to have something dirt cheap like FXY if I could buy like the $66 call? Okay. So I could pay, $540 for a trade that by January of 2027 is hopefully up here towards $74. So question is, if we go here for $17 and I pay 17, I mean, that's a 340% profit. Okay, that's not bad. But is that enough time in the trade? I mean, that's essentially saying I think that the Japanese yen is going to get stronger, blah blah. If I want to make it cheaper, then I trade that time and I go all the way out here to 75 or 74, and I buy the dirt cheap. Like I buy this for $200. Well, this $200 can become, I mean, it's probably not the best trade to do it structure wise, but this could become, same thing like $1,700 for a $200 risk. That's pretty good reward to risk. Like that trade is worth it. It's just the timing of that. It's got to be pretty perfect. And I think the easier trade is, I don't know if this is a big if, but if the Japanese yen gets weaker, maybe we hit this low and find support. Maybe we break this structure. We start to, I mean, once we're here, this becomes a pretty bullish trade. Japanese yen futures becomes a pretty bullish trade. Currencies probably moving high volatility on the Japanese yen strength. I just don't know, if we see it. What I'm saying is, if I'm going to participate in the Japanese yen, I want to do it with like no swaps. So I don't pay a commission. I don't pay a fee on buying FXY. I would pay a fee if I did it 6J, which is Japanese yen futures, but that's a one and done. There's no negative swap on that trade. So anyway, I will wait. I'll kind of wait this out. If the futures contracts go out longer, maybe, but probably the cleanest way to trade it with the most time horizon would be FXY. Cheapest way to trade it, still get the benefit of a Japanese yen move. EWJ, that's Brazil. DAX is up. I'm long the Fez. FTSE, I'm still looking for a pullback here on the FTSE. Now we're getting into our Mag 7s, which we talked about earlier. Bonds, TLT, 10 years still up. Okay, I know Trump is very vocal to Powell right now, cutting rates. I mean, today I saw the headline, Powell's costing us $900 billion in interest rates. Listen, dude, if we cut rates by another 75 basis points and these bond yields go up by another 75 basis points, like Trump is going to look like an idiot. He'll never say that. He'll never admit it. But if we have the bond market do the exact opposite like it did last September, this is another reason the Fed is not touching anything right now. Okay. I mean, we will know more the end of July, because after July, which is another pause, September's action time, and there's no meeting in August. So if you go to the watch tool here, go to the watch tool, go to probabilities, 95% chance that July 30th is a nothing burger. They just pause. But it's the language of that might trigger something. Okay, because we don't have an August meeting, but does the market move to price in something? I think that this rate cycle has already been priced in. Okay, so September, is this back to a, what the fudge? I'm looking at here like this has switched a little bit. This was a cut for September, cut for October, cut for December. Now it's looking like that's getting pushed out into cut September, pause October, cut December, and then maybe cut January as well. Either way, like we're getting 3 cuts at least from the look of it. Obviously, that can be something that changes, subject to change. But I don't see Powell bending over backwards to appease Trump when the reality is the bond market is going to be what ultimately decides what the Fed's going to do monetary policy wise, I think, because if the bond market is going to react adversely to this and yields go up, I don't know if this takes some of the shine and some of the awesomeness away from equities. I mean, if this year, like the S&P's up 6% and you can somehow get 4.5 to 5% with virtually zero risk, why would you not do that? So unless the equities market this year has just another gangbuster, like 15, 20+% year, that obviously makes bonds feel like garbage. But if yields are up and people can take risk-free returns at 5% or 5+%, it's hard to say when the equities market averages 7 to 8% a year, why that would be any better. So anyway, we'll see. But the big trick for the bond market this year is, will the Fed be cutting and will the bond yields go the opposite way? So if the Fed cuts rates, official cash rate goes down, yet yields go up. That's not a good sign. That's the backwards that we saw in September last year. We're no better off. I think the lowest mortgage rate we saw here was around 6%. Now it's 6.7, 6.8. That's the average mortgage. So unless housing prices are coming down, unless we start to see some real fragility in the labor market, these are just things we got to be watching. It's certainly not enough to break the market. I mean, the reflexivity of the market from those April lows is as good as I've seen since COVID. I just don't know if we're going to continue this crazy melt up. Different environment. But I'm not bearish. I just would like a pullback. Or we get into just straight up bubble territory and I'm just like, fudge it, I'm shorting this market now. We're not there yet. Like for me to say I'm shorting the market, we got to be pushing 6,500 in a straight line. We got to be pushing 7,000. Then I'll start talking about shorting the market, just because it's ridiculously overbought. But that's not there yet. So anyway, all in all, price today pretty darn easy. It was nice to see a directional day, grab some profit. This was done. I'm out of there with some profit this morning. If we go up to, I'm going to look at like this 90 to 95 handle. I'm going to maybe put in a sell trade at like 95 to 3, maybe the 90 by 6,300. Take a look at this today. SPX for today. If I could do a 60 to 90 by 6,300, if that can get filled for $5, I'm going to take that trade. Okay, so I'm going to put that trade in. It may not get there. We'd have to go all the way up to like 93, 94, 95 today for that to have a chance. And honestly, the market closed in 2 hours, so it's highly unlikely that gets filled. But I'm just glad that I traded the market directionally today because it has been nothing but bullish. However, caution for next week would be the following. This will be my last little segment here. We have had 9 candles up. Okay, 8 of the 9 being green. Directionally, even this one, even though we gapped higher and faded, this is a pretty good cycle where if you're following 7 to 11 candles, 8 to 11 candles, typically in like a stochastic cycle, this is an up move, and then the stochastic starts to turn down. So a pause or a pullback I could see happening, sooner than later. But honestly, if we don't go anywhere other than up for July, then August, September, I would say buckle up for some volatility because we got to get something. I could be wrong, but my gosh, man, like we pulled back in 2023 in a big bull market. We pulled back 10%. 2024, we pulled back 10%. Like this, like sometime July, August, September typically equals some type of pullback. And given the volatility that we've seen this year, it wouldn't surprise me to have like a very challenging, fast, aggressive, like 5 to 10% correction that nobody's going to want to see. Who knows what the news alignment is going to be on why it's happening, but something to pay attention to. Okay. So, all right. I think I'll let you go for today. Enjoy the rest of the short trading hours. It's markets closed at 1 p.m. Forex should be open tomorrow, but otherwise we'll pick things up where we leave off on Monday next week. All right. Take care, everybody. I'll talk to you soon. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.